He's got today's drill down. Better than expected, not too shabby here, right, Corey?
Well, and when you look at the numbers, it gets more interesting as you dig into it. You know, we know the stock performance. We know the valuation of the stock was apparently wrong when the company first came out. We've seen what the stock has done in its few months as a public company. But, you know, the numbers that I really think are really important to look at in Facebook are all about how many users they are and how fast that's growing and the value of those users. So user growth was slowing down precipitously, and it continues. It's still growing and still slowing, but not that much. So user growth, you know, once you round up, you get to 6%, which is about what it was last quarter, which is about what it was fourth quarter. So it's not the huge double-digit numbers they saw even, you know, 2 years ago, but not dead yet. That's probably good news. But then when you look at the monetization of those users, that's when it starts to get really interesting, because their average revenue per user, that's the number of ad sales, basically, or all the ways that they get revenue. That number had been shrinking, and we saw a pretty clear trend from 30 to 3 to 0 to -3. Well, that ticked up again, 2%. That's a really big deal for this company, because it means that they're getting profit. They're finding ways to squeeze more money out of their users, whether they're adding more valuable users, whether they're doing it with mobile, who knows? But it's dramatic stuff for them to see a turnaround. A couple more quarters of that, and things will really start to look better.